Hey, good morning, everybody. Morning, David. Morning, Alan. Morning, John. Morning, Michael. Morning, Francois. Morning, Beth. Morning, everybody. Whoo. FOMC. An aggressive hold, I guess, is what the narrative is on that one. Um, I don't know. Why is the market moving on? We're not going to do anything. You got me. Morning, David. Morning, everybody. If you want to talk, chat with me while I'm live, all you got to do is be a subscriber. A few seconds later, it opens right up that you can chat on the live stream. If you're watching on the web, pops up over to the right, I guess it is. And if you're on your phone, you kind of have to do whatever to get the chat to pop up. But I do chat with you while the live stream's going. If you're watching later on, leave a comment down below. I'll get back to you as soon as I can. Morning, Dan. Morning, David. And yeah, so I do this almost every morning. So hit the bell with the little doodads while you're at it and get notified. If YouTube thinks it's something you'll watch, you'll get notified when I go live. So Valerie, Philip, morning, everybody. Michael, Dave, morning. I'm glad to have everybody. Nice crowd this morning. Chatty bunch. If you got questions as I go along, Maurizio, morning. Let me know, and yeah, we'll try to cover it. So let's jump into. I didn't even pop up my charts that I brought to show you. Let me grab those really quickly before I. Oh, dang, got too many windows. I can't even see what I want to show you. All right, I need this. Man, I brought a story. I want to talk about. I brought some charts. I was sitting there getting started a minute late because I was making charts. I wanted to talk about a bunch of stuff here. Let me pop these all up and we'll get started. And chart number, there we go. All right, I think I've got them all. There we go. All right, so first off, we've got to do this. Oh, there we go. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may be full of crap. You know, let's face it. You may be full of crap. I may be full of crap. You know, anybody out there may be full of crap. Anybody on YouTube may be full of crap. Certainly, the people on mainstream media. When I say mainstream media, I'm talking CNBC, MSNBC, CNN. You know, whatever financial news junk you might be into watching, they're certainly full of crap. You know, Jim Cramer getting it backwards all the time. You know, the inverse Jim Cramer index. Anyway, so this presentation intended to be informational, educational, and fun. I'm trying to inform you, trying to tell you the truth the way I see it. And it's not a recommendation to buy or sell any financial instrument. If you make personal financial decisions, it's on you. And if you desire personal financial advice, you need somebody to help you with those decisions, you need to hire and consult a financial advisor. So let's keep that all in mind as we move forward. Now, we had the calendar, and let's look at this. We are on Thursday this week of this busy economic news. We have retail sales coming out this morning, kind of flat, right at, meeting expectation, 0.1. I mean, that's pretty lame, not rocking. That's month over month, 0.1. That's not super great retail. Empire State Manufacturing coming in at 6.6, expecting a minus 15. That's considered a good number, I guess. I don't know. That seems like we've been kind of in a recessionary type situation. We got a pop a couple months back and right back to the lows. That looks like we've kind of been doing a recession, right? Less manufacturing. I don't know. Little 6.6 pop. Still pretty down. And retail sales month over month, 3.3. Little uptick. We're expecting a -2. Got a little uptick. I don't know. Unemployment claims coming in at 262. Expecting 246. And like I've talked about, this is not a spike in unemployment. Let's zoom back and look at reality here. Look back here. This is what we used to. This was pre-COVID. I mean, look, we churn, somewhere around 200 to 300,000 jobs a month. Like that's just kind of like the standard. You say, oh, we were declining our job losses. I mean, then we had a big spike into, the great financial crisis. And I mean, that didn't even really pick up till the backside of the great financial crisis. But look, I mean, coming on back here, before that, 300,000. That's just the churn. That's how many people hate their jobs and do a crap job and get fired. So I think right now we're just in this seasonal junk right here, and they seasonally adjust the seasonal flow. I don't even know what they're cooking the books every time. We'll probably go up here, make another little spike, and then drop, and then spike and drop, and I mean this is the area it churns. A spike to me would be, oh my gosh, we lost 400 or 500,000 jobs. Not, I mean, this is just people being people. You do stupid stuff. You don't show up to work, and you get fired. I mean, that's you hate your job, you get fired. I don't know. The normal, to me, that's all normal churn. Like that's not a spike in unemployment claims or anything like that. To me, a spike is all of a sudden we have an extra 100,000 we didn't expect. Not, 20, 30,000. They can't even guess that close. The system's not even built to get the numbers that close. Anyway, tomorrow we have consumer sentiment at 10 a.m. So please be aware. Market opens, you're all like happy. You're like, oh, my position's all right. And then 10 o'clock rolls around. You're like, oh my gosh, what happened? Consumer sentiment and inflation expectations right there from University of Michigan. So just be careful. Be cautious. And FOMC member Waller getting out there speaking at 7:45, well before the market opens. So those two events coming up tomorrow. The rest of today, relatively benign. I mean, we got some industrial production, capacity utilization, business inventories, natural gas. Could move some markets. We're looking at possibly a little bit of pullback here, and all the charts that I was popping up here. Let's see if we can, if I can figure out what tab I threw them onto. There we go. So I shared this with the VIP group last night, and silver is significantly underpriced given the looming supply shortage. Now, interesting things in here. Silver makes up a lot of solar panels, if you didn't know. And some of the interesting bits in here, the shortfalls of the previous 2 years, just the last 2 years, ate up the cumulative surpluses for the last 11 years. All right. Production has been falling. Production fell last year and fell this year. Expected to fall next year, while demand is still ramping up. So demand the last 2 years ate, the surplus demand, or the shortfall demand, whatever, ate up the 11 years of surplus prior to that. What do you think is going to happen with the increased solar demand moving forward, and the fact that output is still, and this is global output, is still declining? And also combined with the fact that it takes about 10 years, somewhere in here it says 10 years plus, to develop a new mine. This is for silver production. This isn't something we can just ramp up tomorrow. All right? This takes like a decade to get a new mine going. And I don't know why I'm getting a bunch of alerts, but silence my phone there. So 10 years to make a new mine, and the current silver gold price ratio, 81 to 1. Historically, we usually float between 40 and 50, and it spikes and gets up into 30 to 20. So think about that. That's not usually gold plummeting. That's usually silver rapidly increasing in price. It usually does these crazy spikes, as you can see down here on this chart. We usually go through a period of rapid price appreciation on silver. This fits with my outlook that silver's probably going up, SLV particularly going up into the 35 potential range. And that's going to be somewhere, probably not this year, maybe next year, maybe 2025, maybe longer. But as we see in this historical thing, this could pop in a couple months and be like, we could just get there like super fast. So that's the gold silver ratio, and that resolving very quickly, and tends to drop. The gold silver ratio, usually when we get up to the top, we come back very quickly. So cuts both ways. You spike and then come back down. All right. Can it go further? Yeah, it can go further. It went up to 120 just back here, and spikes down. So all righty. Moving on. Morning, Andreas, Craig, George. Morning, everybody. So let's talk about the S&P 500 for a second here. This is my 3-day chart. If you haven't seen this chart before, you're brand new here maybe. Maybe you've been around, but I haven't pulled this up in a few days because it's a 3-day chart. It doesn't move super fast. But I drew these white arrows back here in January, well before they actually happened, because they happened kind of in February. We came up, we bounced off this downtrend line. This purple line was the downtrend of the highs from 2022, last year. And we came up and bounced off of it right here, coming into December. Everybody remember, does anybody remember December? It was scary. It was rough. It was kind of wicked and sideways. I mean, we kind of spiked up, hit resistance, pulled back. Everybody was calling for a lower low. And then we went on another monster run into February. And, when we did this right here, I drew these arrows. When we were right down here, I drew these white arrows. Everybody in Discord was like, I hope that happens. And then, lo and behold, we popped up. We pulled back, went a little deeper. I was hoping we would hold the purple line. We didn't. We went a little deeper, and that was into March. The March low, March 13, right down here. And then we have been on a relentless rally. Now, caution. We hit the 1272 of this pullback. On this pullback right here, we hit that 1272. We hit that yesterday, 43.75. Now that purple line coming across there was the previous high from August. Well, I guess that's zone. On my other chart, it's a big orange zone, topping zone. It was right in there. And purple's kind of the bottom of it. This can be the top for a little while. We may pull back before we rally on up to this is an ideal target. This could be the 3 right here. We could get the 4. And before we go up to the bigger 3, it's up off the top of the chart. It's got the little bubble up here. It's 48.83. Then we'd get another 4. And then the 5 is way on up there, like 6,000. So be careful. If you're not ready for a pullback, I keep beating the drum on this pullback. There's a reason. It's the count is getting full. Now, when I say the count is getting full, when I look at NQ, like the 4-hour chart, we're right up to extensions. And this is, I posted a bigger picture of this in Discord yesterday. We've hit a lot of extensions on this last move on NQ. We hit a lot of targets on the way up here. We turned and made very Fibonacci-based turns that fit very well with the way I look at the market. And this is getting to be the end. Now, is this little pullback we're getting now the end? I don't know. We may, when I say the end, it's the end of the current move, and we'll get a bigger, deeper retrace. If you're not prepared for that, please be careful. Please be careful, okay? Things are looking a little bit cooked, and everybody's tipping the boat. Everybody's like, oh, we're bullish. All the fears are done. Everything's looking great. Jerome Powell and his crony team are all pausing. The world is all saved. Everything's okay. That's the exact point when we usually get a massive pullback and everybody freaks out again. The Bank of America Fear and Greed Index kind of almost maxed out on greed. That's usually the point where the market pulls back. So please be looking to book profits and protect gains at this point. S&P 500, this is jumping down to a 15-minute on the future. This is the spike down we did yesterday on the FOMC. We kind of popped right back up, and then this is looking a little not so bullish here overnight. In Q, this is the NASDAQ futures. Actually made a higher high after the market closed last night and then started pulling back. ES here, this is S&P 500 futures. Never got that higher high and started pulling back. So kind of holding this could be a definite measured bounce set up to go lower, and it could lead to a larger correction. This is entirely in the realm of what we might need to do. So please, please, please be careful out there. All right, let's look at what's actually moving today, shall we? That's way more fun than talking about that. So S&P 500, another way to look at it, this is based on the closes in a very simplified chart. We may rally on up to 44.24. Entirely possible that we see that little extension there. Might happen, but it's more likely we get the pullback off of this. I mean, I drew this big target zone on here. It's been there for months and months. Please be careful. We're right at the target. Pulling back off the target is the more likely scenario, especially after, see, this simplified chart did hold the trend line based on the closes and the simplified line. That's pretty interesting to me. The 3-day chart poked through, but the based on the closes, we actually held the downtrend. Back tested it, broke out. So I was calling for the bull market when we broke out right here, and then we back tested. Everybody was like, "Oh, you're wrong." And then guess what? It's a new bullish market, but we probably need a pullback back into this orange zone. Go retest this place where we had so much trouble breaking through just a couple weeks ago. Go back test it, break everybody's spirits, and then off to the races. All right. Moving on. Morning Monster list. Let me refresh it because that's not the current list, I don't think. Reload. I don't know why this thing doesn't keep updated, synced up, but it doesn't. So anyway, let me turn off that new indicator I'm working on and put it on the daily chart. So S&P 500 coming up here. As we keep talking about, it's in a potential reversal zone here. Potential. High potential. S5FI got up here a little higher. We didn't quite make it up to 80, but we could do another one of these dips. We definitely came way up off the 20s, and we can see it churn more right there in the middle. That's stocks above the 50-day moving average. If you're unfamiliar, S5FI. You can pull it up on TradingView. You can pull it up in barchart.com. There's a few other platforms that have it. It's just stocks above the 50-day moving average. We tend to not go above 80 for very long, and we tend to not go below 20 for very long. It's kind of happiest right there in the middle. So we've been kind of in the middle for a number of months. We did poke out in March just briefly, but since then we've just kind of been in the middle. And there is a similar one in the NDFI NASDAQ. This one's kind of reaching the tops we've seen for most of the year so far. Be careful. This has led to pullbacks. We can see NASDAQ pull back here. All right. Russell continuing to consolidate in this box. This may be the top for now. This may lead to another pullback. At least, at the minimum, this could be. Let's run that. Let's just fix this fib line right here. Grab this one. No, that one. There's the one I want. Pull this up here. We may see a pullback to this support right here at the minimum. Right there. Before we can bounce and go. Now, if we break down below that, that would lead to a lower low. And those targets are down here off the bottom, down here, like 1650. You might be like, JT, how do I trade that? Well, how do I trade the ES, the NQ, the RTY? Well, the ES is SPY ETF, you may be familiar with. NQ, QQQ, And RTY is IWM. So IWM, you can see, looks very similar. Not exactly the same because futures trade a little longer hours, but we may see IWM do that pullback at this point. It can look something like back down in this area right in here. Back around 175, 177, 78, somewhere in that zone. We break down below that, we could see a deeper move down to 161. Oil, just kind of churning right here. We may poke lower, we may break out higher. It's stuck right now. The low was down here around 63.80. The highs we kind of rejected up here. This has become a mucky pattern that's unreliable at the moment. Waiting for it to resolve one way or the other for me. And stuck below the roadmap line on the daily still. Nothing great happening here. Market just opened a minute ago. Gold looks like it may reach down to the roadmap line like I've been talking about. Everybody's like, oh my gosh, gold! Oh my gosh, gold dropping on the Fed holding. What the heck? I've been expecting gold to drop and come down and touch the roadmap line for weeks. Nothing new, nothing surprising. Bitcoin did go a little bit of risk off, dropping yesterday. Ouch. Ethereum also dropping yesterday. Ouch. Be careful on this stuff. Dollar. Yeah, it's probably going back down to the lows. If not, get the extension down to 99, possibly 98, possibly even down to my target around the mid-90s. We'll see how this plays out. Looking like it's going. ALDX. Yeah, just kind of chopping around here. Therapeutic, biotech. Biotechs are dangerous. AVXL. Another biotech. These were making the stock twits list. MRSN. Kind of looking to try to break out here. Another biotech. KR. Ouch. It's not an overly bullish chart. We did the bullish thing back here. Now we're in a correction, and this is corrective, and this probably needs a lower low before it all wraps up. JBL, holy cow, reaching targets. At some point, that's going to pull back. VUZI. Just kind of churning in here. Nothing super awesome. And then SoFi, yeah, definitely reaching targets. I would be careful on a pullback. That's kind of looks like it's actually attempting to do what I drew the arrows for. Be careful. That can lead to a bigger pullback. ALV, just chopping in here. Cost, I don't think cost made the morning movers list. WTG, continuing to be horrible. EDTX, crazy pop on who knows what news. DPZ, Domino's, stuck below the roadmap line. Nice pop, but be careful. That's still a downtrend, and we didn't quite reach the target. Lennar, reaching targets. Probably going to get another pullback. PDD. Yeah, just I'll pull up cost for you. And potential to break out. Still stuck below the low. Yeah, it's potentially breaking out of the watermelon seed. We haven't made a higher high yet. That's the thing we need to do. Otherwise, this can fake out and drop down to this 300 area down here. So be careful. Be careful. This can be a fake out. Target getting a little bit of pop, but after that monster move down, a little bit of retrace expected. I'd be careful. Nothing's super changed on target. T-Mobile, TMUS, looks like it still wants to go a little lower. BABA, still stuck in between. And it's got resistance right here at the orange box. So that meant, if it can break above that, it's time to go. TSLQ, getting a little pop, but that's on Tesla. I'm sure pulling back. I expect Tesla to come back to the roadmap line. Highly expect it, just like that S&P 500 breakout, to bounce off the trend line, retrace. That's the trend line, downtrend line of the highs. Be careful. ASML, it's at the target. Done for me for now. BEGNE, getting a pullback. That's another pharmaceutical, biotech. MSTR, pulling back on Bitcoin, pulling back. and probably going to go down and retest this support box down here. ANET, get a pullback, probably come back to the roadmap line around 143. SOXX, if we get the market pullback, this is probably going to come back to the roadmap line down here around 427. SMCI, that's bubbly and probably going to come back to the roadmap line here in the next few weeks or months. MDB, potentially breaking out, still stuck in the resistance above this zone, can take us on up, but we may see it retrace the gap here. And NVIDIA, of course, going crazy yesterday. At some point, this thing's going to break and come back down. Be careful. Retrace, highly likely. So bias for the day, I'm cautious. We may see a bigger pullback here. We don't have to go any higher. So that's kind of my bias for the day. Still super cautious. Remember, the market's closed on Monday. So you got today, tomorrow. Take care of your positions, and then we'll be back Tuesday. So I'll do a crypto special on Monday. Otherwise, that's it for the day. Kind of upward bias a little bit, but I'm thinking we may roll. So be cautious. We start breaking below the lows yesterday. Probably going to start coming back down much further, much faster. All right. Continue the conversation in Discord. If you want to come join us, links in the description. So see you later. Bye for now. Have a great